How's it going? It's Rocky. Welcome to week 16 of our trading journey in the year 2024. Two topics I want to discuss today. The first one is the true starting line that I've been aiming for. So we're finally at 20 performance accounts. So I'll go through our performance there for the week. And our second topic, I just want to go through a trade that I did today, which I did end in profit. However, I considered it a very bad and lucky trade. So I want to go through the entry and the exit of that specific trade. And before we get started, just a quick disclaimer. This is for informational and entertainment purposes only and should not be relied upon as a basis for investment decisions. So transparency is really important to me, and that is one of the main reasons that I post my journey on YouTube and other social media mediums. And it's also a diary for me because that helps me improve with my trading. So for the day, Friday, April 19th today, I was able to get a profit of $538 for across 20 accounts. So it doesn't really take much. However, which I'll go through in the next topic, I call this trade a lucky trade, a bad lucky trade. And I'll pretty much go through my entry and exits and just go through that experience with you. And just looking at this chart, as I mentioned, this first 20 here are the Apex accounts, and you can see that they all start with the letters PA, which is performance account. What that means is each of these accounts, once I hit 26,500, or rather 26,600, I will be able to make a withdrawal from it. So think of it as anything I earn moving forward is more or less real money. And that is something that actually changed your psychology when you're trading. So it's only on day 2, and it's definitely psychologically already affected me. So I will do my best to get that together next week and hopefully trade a little better. And also in here, you can see that I am also trading one trade day account. It's a 10K account. We're already at 11,000. The goal is to hit 11,000. However, that goal actually moves when your one day is more than 30% of your total profit, and I need to trade a minimum of 10 days. So that one, just a couple more days before we can hit that, and it becomes a funded account as well. And towards the bottom here is a top step account. So this top step account is 50K account. So that means that I need to hit 53,000 before that account gets funded. So you can see here, there's 3 funding firms that I'm working with because I want to diversify where my funding is coming from. They all have different rules, so that's my way of diversifying my risk. And also, they also have different payout methods. Okay, so I've shown this Excel sheet in the past, and this is how I keep track of my progress with the PAs. You can see here for, most of the week, it was at 0 because I didn't have the PA yet. I didn't get the PA until Wednesday night, essentially. So for Thursday and Friday, happy to say that, 2 green days, which is pretty good. And for the week, we had a total net profit of $1,866. And if we go back to the left here, you can see that our running total year to date so far is at $2,866. And I've only made a withdrawal of $1,000 so far, which was right here on week 14. So now we're on the second topic, which is to go through the trade that I did today, which I consider not the best trading and it's just a lucky trade. So for today, Friday, I only took one trade actually. I always enter with only one E-mini, so one YM, which is the Dow Jones Industrial Average. And the chart that I have here, I know I haven't shown charts in my content in a while, but if you go back on all my content this past few years, I normally do some trade analysis on the existing chart that I have. But if it's your first time seeing it, on the left here is a time-based chart where each candle is 5 minutes. And on the right is a tick-based chart where each candlestick is 512 ticks or 512 transactions or trades. And I am using Heiken Ashi candles on the right. And what I'm showing here is the chart for the day. And you can see it's still moving because it's only 12:23. So it's power hour in the Pacific West Coast. And the yellow line that you see here, this yellow line is essentially the close from yesterday. And you can see this significant dip that occurred right here. So this dip was when the news came out that Israel retaliated to Iran, and the market pretty much reacted due to that. And then I think after that initial news, you then saw a bit of a recovery for the YM. However, that's just the YM, because if you look to the left here for the S&P 500 and the Dow Jones Industrial Average, it's actually in the red. A lot of that is being led by not just the Magnificent Seven, but mostly Nvidia. This week is actually going to be a record loss for the Magnificent Seven. So pretty interesting how that is, that divergence between the NASDAQ and the YM. And I need to remind myself that when all these three major markets are not in the same direction, I need to be more extra careful. And that's what essentially happened today. So I am going to zoom onto the trade that I made, which did not occur until midday. So I'm zooming into that trade right now. And basically, you won't be able to see the entry and exit here because I no longer trade on Thinkorswim. When I was trading my self-funded account, I traded on Thinkorswim. But right now, I just do my analysis here, and then I make my entry on NinjaTrader with the Apex Trade Copier. The eventual goal, of course, is to go back to Thinkorswim eventually with my own self-funded account. So what I normally do is when I enter a trade, I denote this by this blue line. And when I exit a trade and I short, I denote that with a purple line. When I go long, I would denote that as an orange line, but when I short, I denote it with a purple line. And the main reason that I do that is because I can go back later to analyze why I entered. And I basically base my entry, of course, on the candles. And a lot of it is on the stochastic RSI and the MACD. MACD being moving average, convergence, and divergence. And the vertical line pretty much shows me where my entry was. So I'm going to circle where that entry is. Or rather, I'll just do an arrow so we can actually see it a lot better. So that's the entry there. And that's the entry right there too on the time base. Now I'm going to switch to the tick base. And the same thing. The entry is right here for the stochastic RSI. And the entry for the MACD is right there. So when I trade, I wait for those two to have congruence. Again, this is how I trade. I'm not telling you to trade this way. But if you needed a start with something, feel free to try this out. But hey, take it with a grain of salt and validate your own way of trading. So normally, when the stochastic RSI is on the oversold side and a crossover has occurred, that's normally when I short, which is what I was seeing here on the tick-based chart. However, on the time-based chart, at that time, it was close to a crossover on the MACD, and the stochastic RSI was heading to the oversold also. So that's why I entered this, because it was following my rules, but it was a bit aggressive on the entry because the stochastic RSI was still headed there. It wasn't where it needed to be. And as you can see right here on this entry, which I drew with a white line, 38,206. All right, so after the entry at 38,206, unfortunately, it just reversed on me so drastically. And that's why it's so important to trade with an OCO, right? One cancels the other. And my max risk is actually at 60 points. So from 206 to 256, my max risk was actually right here. So I should have been stopped out. And that's the one bad move I made. One was I moved that stop up there. I moved it drastically a lot higher and gave myself a lot more room because I believed in my entry. So that's my first bad mistake there. And then this drawdown that you see right here was actually a total of 138 points. So I'm going to bring the calculator here. Let's just calculate that. So 138 points, where each point is $5. I was actually down $690 on that one account. So times 20, I was actually down 13,800. And yes, it's a funded account. It's not actual real money for me, but that's still very irresponsible trading on my part. But anyway, I said I got lucky because as you can see on this trade here, it eventually fell down. So you see this candle. So after about 15 minutes of crazy drawdown, this first one dipped, second one dipped, and you can see right here when it was below my entry, I was like, all right, I just got lucky. Let me just exit. I exited with a profit of 6 points, and I recognized at that point that, hey, I just got lucky. It was a bad aggressive entry, but the entry was within my rules. But the bad part is that I moved my stop, and there's only so much of these lucky trades that you can have in your career or during the week, right? And it's not sustainable. So that's why after this, I said, all right, we're done for the day. We need to regroup, and I need to go back and analyze for the week, or just over the weekend, analyze what I did that I could improve on for next week. So yeah, that's the time-based side. If you look in the tick-based side, it's a lot cleaner right here. But the one thing I wanted to point out too, let me just remove that circle. After that exit, you could probably say, hey, look, you went down another 100 points. You could have had a really, really amazing profit. But something to think about is after I exited, it popped up underwater again on this short. So I would have been underwater again, and really I just needed to get myself out and regroup before I did something more emotional. Anyway, I hope you enjoyed that chart analysis on that trade. TLDR, I guess the main thing I'm trying to get at is do not move your stop, follow your rules, and as much as possible, do not, even though if you end it in a profit, a lucky trade is not a good way of trading. I repeat that again. A lucky trade does not mean good trading. So don't let that fool you into thinking you're doing something well. But at the end of the day too, I'm actually a huge fan of the book, The Psychology of Money by Morgan Housel. I have a snapshot right here. Highly recommend this book, and he actually talks about the idea of luck. Anyway, hope you enjoyed my content. If you didn't, give me another chance, and hopefully you'll like the next one. All right, thank you for tuning in. I'll see you on the next one.